It is 7:30, so let's get going. Welcome, everybody. Thank you for joining us this evening. My name is Carli. I'm the Director of Strawberry Seed Consulting, and I'm joined by Frances, our Principal HR Advisor and Mental Health First Aid Trainer. And as we have done for many years in a row in this last week of June, we are here to talk about the award increases and basically what employers need to know about that process. And it's been out last year, we broke the record on the number of people, and we've broken it again this year. So it is, and I just want to say thank you to those that actually wrote in their notes about how much they appreciate this and how much they get out of it every year. So we did appreciate those lovely words. Thanks, Frances. I'd like to start by acknowledging the traditional custodians on the lands on which we are all meeting tonight from different parts of the country. And I'd like to pay respect to our elders past, present and emerging. And I'd like to extend that to anyone that is with us here today. Now, for those that don't know, this is our gorgeous team. We are Strawberry Seed Consulting, and we are a boutique HR consulting and recruitment firm. We have been around for 12 years, and essentially we help small businesses and bigger sometimes too, all around the country with their HR needs. And, you know, many of you that have worked with us in the past will have worked with many of our team here. And essentially, you know, we're there to help small businesses ensure that they're doing things right, but also help them improve their business and manage their people. So what we're really here to talk about, and what you guys really only care about anyway, is the minimum wage increase that is effective on the 1st of July 2025. So each year the Fair Work Commission actually reviews what the current minimum wage is set at, and there's a lot of submissions from lots of different places, industry bodies, unions, anyone can make a submission really. And then they make a decision, which they made nice and early this year, which was great. And the decision this year was that there will be a 3.5% increase, which will increase the minimum wage to $24.95 per hour. And there'll also be a 3.5% increase to the minimum wage across all awards. And we're going to talk about that in a little bit more detail as we go along. Now, before we jump into the nitty-gritty of awards, I do want to just briefly cover what laws actually govern employment in Australia. And anyone that's been to one of our webinars, this is almost a standard slide that we have, because it's really important to understand how our system works. And if you're ever wondering what Strawberry Seed does, if it falls under the Fair Work Act banner, it's going to be us. If it falls under the ATO, it's probably not us. So that's a pretty good rule of thumb. But, you know, our laws in Australia around employment are underpinned by the Fair Work Act, and that is the legislation that covers anybody that is employed in Australia. Now, that legislation contains the National Employment Standards, or the NES, and the NES really, it's like the 10 commandments of employment in Australia, right? It's the minimum employment conditions that every employee is entitled to. And that is things like that, you know, what a 38-hour week is considered to be a full-time employment. It's things like the type of leave that you're entitled to as a minimum standard. And so all of those things are set in stone in the NES and ingrained in the Fair Work Act. Now, the next level, which is where we're really concentrating today in our system, is their industrial instrument. Now, that might be an award, but it also might be an enterprise level agreement that has been made within your organisation or a couple of organisations within an industry. And this is the next level where the detail is found for different industries or different professions. So some awards are very much about one particular, you know, specific industry. So for example, the Building and Construction Award is very much written for that industry and covers the majority of positions that fall within that industry. Others are more you know, profession specific. So it is not uncommon that you might have multiple awards that apply to your business. Now, in the case of building and construction, that would be that doesn't cover clerical workers that work in those industries. So anyone that they will be covered under the clerical award. Whereas we have other industry-based awards, such as the Health Professionals Award, and I know we have a lot of people under that award here with us today. That award actually covers both administration and it covers people who work within allied health. So it does depend on your award, but we have some clients that have up to 3 or 4 different awards. Others are all incorporated into one. But essentially what it's doing is it's setting the specific detailed entitlements for employees that are covered by that industrial instrument. So we're getting into more the nitty-gritty things like span of hours, etc. And finally, we have the employment agreement. Now, the employment agreement is actually a contractual arrangement between the employer and employee, and it's specifying the employment conditions. Now, it's important to note that you can't be the entitlements can't be less than the level below. So the awards and the enterprise agreements can't offer less than the national employment standards. And so they actually often will just refer back to the national employment standards, but they might offer more. So if they offer more, they'll have more detail, but if they don't, they usually just refer back to the NES. Now, when it comes to an employment agreement, there are some entitlements and things that can be offset against each other within an employment agreement. So then, for example, you might not pay a particular allowance to someone because you've incorporated it into their salary. So you can offset entitlements. But each level can't be less than the one below it. So you can't contract out of award conditions. As I said, you can offset some as long as there's a benefit to the employee, but you can't contract out of them. Same with the national employment standards. You can't say, well, I'm only going to offer 5 days of sick leave per year, because you can't do that. But employment agreements, technically speaking, you don't need one. You don't legally need to have one. But if you don't, then everything to do with your business and your employees and how they're engaged is covered only by the award and the NES. So that is, you don't have any other protections, necessarily around that, apart from a few that are ingrained in common law. Whereas an employment agreement is likely to be very clear about things where there is additional entitlements, or and includes a lot of other clauses and things that are really helpful for managing employees. And so, of course, we highly recommend them. We think they're great, but it's important to note you can't contract out of things. So as I mentioned, your industrial instruments really where we're going to focus today, and we're really focusing on awards because that's where the increases have happened. So it's usually that modern award, and the employment conditions it can cover is everything like different classifications, which Frances will get into in a moment. So there'll be, different classifications within an award will receive a different minimum wage. Now, it's really important. We're going to talk about this a lot today. When we're talking about the minimums that are set out by the award is not this is what you have to pay. It's the minimum you have to pay. You can definitely pay above it, and we'll talk about that as well. But you need to correctly classify employees, and then that will tell you the minimum amount you must be paying them. It's going to cover things like what breaks employees are entitled to, what penalties and loadings and allowances are applicable. Are there minimum hours per shift that must be met? What are the different span of hours? And some awards have multiple spans of hours within them. What are the rates that are paid for shift work? So this is why you need to understand which industrial instrument actually applies to your business and the employees within your business, because you need to ensure that what you're offering is hitting these minimum standards. So there is a full list of all the awards on the Fair Work website, and I beg you, if you're going to look for an award to read the details, go directly to the Fair Work website, because then that is the most up-to-date version of that award. Unfortunately, we've had instances where, people save them down as a PDF to a website. And, if Frances, I might get Frances to skip to the next slide, because, it's really important to make sure what you're looking at is the most current version. So you'll see there in the red circle there that's horizontal, that actually we know that this is a screenshot because we took it today, of the updated Health Professionals and Support Services Award. And we know that it's the most recent version because in that red circle it says the Fair Work Commission Consolidated Modern Award incorporates all amendments up to and including the 1st of July 2025. And then it actually tells you what underneath there, what clauses have had variations made to them as a result of this. So the minimum rates of pay have been revised as per the increase that was announced. The allowances have been revised. That's quite common. So whether that's a travel allowance or something else, I'd say that's most likely going to be the travel allowance that was adjusted per kilometre. And then there's a few other things where other parts where, adjustments were made. That should be your first place to go for any information about what entitlements are. Now, over there on the right-hand side, we've got circled where the pay guides are. And that is the Bible of what you must pay as a minimum. I'm going to get Frances to kind of tell you about a phone call that we had today with Fair Work, just on this topic, because people often ask us, why don't we, once they announce it's 3.5%, why don't we automatically just jump in and start auditing everybody? And we always say we wait until the rates are published by Fair Work. And there's a reason that we wait until the rates are published by Fair Work. Frances, do you want to tell them what about the call you had today?
Oh, the call to Fair Work. Yeah, I do love a good call to Fair Work, I must admit. So we were updating our benchmarking spreadsheets as we do every year. We were marking off the hourly rates that we always do. We had someone double check it, and someone else noticed that the annual salaries that we were calculating in our spreadsheet was not actually aligning to what was in the Fair Work web sheet or the Fair Work pay guide. So our calculation was simply the hourly rate times 38, the weekly rate. So timesing 38, and then obviously you get the annual rate timesing that by 52. So we were a bit bamboozled, and we sort of went, oh, okay, it's probably something along the lines of rounding up and rounding down, but let's call and make sure. So I rang them, and very lovely assistants came forward, and they explained that the weekly rates are the figure that they apply the 3.5% to. They then will round that up or down to the nearest 10 cents. Then they divide that by 38. So you're going to get the hourly rate. They then round that up or down to the nearest 10 cents. So some of our calculations were 8 cents more or less than what Fair Work was. So
because we're relying on formulas in a spreadsheet, and that's very much why we always say until we can read what Fair Work publishes. Now you might think 8 cents is not a lot, but from our perspective, particularly with what we do, we want to be as accurate as possible. So to be as accurate as possible, you go over and you actually access the actual pay guide, and as you can see, you can also access previous pay guides. So if you do an audit and you discover that maybe you weren't paying someone correctly, and you're like, how am I going to know what I should have paid them in the last financial year or the one before? And I can't remember how many, I think one of the worst ones we did was 5 or 6 years worth of back pay, where we had to go back through and calculate exactly what someone should have been paid every year to work out how they'd been underpaid. So you can always access all the previous ones as well. But that is absolutely where we go. And that is the reason, because they make their own little adjustments, and we want to make sure it's correct. Do you want to jump to the next one?
Absolutely.
I'm going to hand to Frances now. She's going to take over from here.
Beautiful, thank you. So I do want to delve into the world of awards. I fully appreciate that many of you might be on different types of awards. We at Strawberry Seed do have a majority, I suppose I can safely say, of people in the Health Professionals Award.
Probably close to half.
Probably a fair percentage. So some of these examples will be from the Health Professionals Award. So essentially the next step, the first step to take when you want to check your employees' minimum award rates is to understand A, which award you're on, and B, to double check the classifications to ensure they are correct. So to find the classification within the award, Schedule A will usually have a list of all the definitions. That is usually at the bottom. If you scroll all the way down, it will be at the bottom, and that will outline what each classification looks like. You may also find it within the bulk of the award, and there's a couple of different ones here as well. So we've got the Retail Award top left there. That's in clause 14, where the classifications are. The Clerks Award is in clause 12. The Shads Award is in clause 13. So you may also have other references as they have there, Schedule A, Schedules B and F. So you will have reference to it in the award, plus you will have it in a separate schedule. So it's always really pertinent to have a look at what the classifications are. Now, The reason we do that is because classifications can change. So different awards stipulate different things. I'm going to talk to the Health Professionals Award in this instance just to start with, because progression through pay points and classifications is on an annual basis or prorated of an annual basis, or it's based on the skills and responsibilities of the role. So it might have to be an automatic 12-month increase in classification. It might be that you're starting on an entry level, so like a level 1. That might be a 3-month time frame where you would have to progress. So this is why it's really, really crucial for us to know and understand what the classifications are and what the progression through those pay points or levels are also. We had a case the other day where someone had brought on an admin assistant within an allied health practice. The person had no experience, put them in at level 1, but 6 months later was still on level 1. So that's the things that we need to be aware of. And look, it's not the end of the world. We can always back pay once we recognize there's an issue, but we do need to be very aware. Another award that comes to mind is the SHADS Award. They have progression just through levels and through the pay points in the levels. Now, in comparison to the Health Professionals Award, there's only 2 pay points generally in each level. So just knowing and understanding what the classifications are that apply and how your team move through them is really, really crucial when we're understanding what we need to pay them as a minimum wage.
And it's important to note too, I think, that in terms of progression, like for example, the clerical award is a calendar year. It's not prorated. So, you know, when someone completes, because there's got level 1, they've got the different levels, then they've got year 1, year 2, and year 3. Yeah. And it's actually done on a calendar year, which there was a lot of going back and forth to, you know, clarify that with Fair Work. Whereas other awards are prorated. You know, some are about, you know, that there's a training one. Particularly, it's quite common in some awards to have level 1 to have like the first 3 months and then 6 months and then up to 12 months to progress someone through who's as a starting point. But if you, as Frances mentioned, if you don't move them and you forget about it, suddenly they're not there, you know, they're a couple of pay points behind.
And a lot of clients ask us, well, how do I remember that? Which is a very valid point if you have a multiple team, if you have multiple people on your team. So I would always suggest, okay, it's just calendar notes. So that's probably the easiest thing. And obviously we do the benchmarking once a year. So that's also the opportunity. You could do it more than that if you wanted to, but that is also an opportunity to check in and make sure that you are progressing through as
Just before we go ahead, I did forget to say at the start that we do have a Q&A section down the bottom. If any questions pop up as we go along, throw them in the Q&A section and we will be answering those at the end. I also know that there is a lot of people, because I know from what you wrote in your registrations, that would like us to talk about the potential changes to the Health Professionals Award. I will cover that off in the Q&A section at the end for anyone that wants to hang around and ask me questions around that, and I'll explain that as well.
Awesome. Thank you. So what are the next steps? You've found your award, you know what the classifications are, you understand the progression points through those. So one of 2 things usually occurs when you pay employees. You will pay the minimum award rates, or you will pay above minimum award rates. So they're usually the 2 ways that this occurs. Now, if you're paying above award rates, that could be as a salary, or it could just be a higher than award rate, hourly rate. If you are paying minimum award rates, you absolutely must increase an employee's hourly rate or their pay effective from the first full pay period after the 1st of July 2025. Now, I'll reiterate that. It's the first full pay period after 1st of July. So if your pay cycle finishes on the 31st of June and starts on the 1st of July.
There is no 31st of June, Frances.
Oh, 30th of June, my bad. I've added an extra day into the year.
I'll give you an example. Strawberry Seeds' current pay period finishes on the end of this week. And Monday is the start of our next pay period. That's the 30th. Yeah. So that's technically, that starts in this previous financial year. So that first pay period technically does not have to have the increase in.
Yes, yeah, absolutely. So if you've got a pay period that finishes on the 13th of July, You will not have to apply that increase until the 14th of July onwards. So whenever your pay cycle finishes, it has to be the first full pay period after July 1st. So you will have to do that, and whether or not it's done in that first full pay period, or whether it's increased thereafter, you will need to increase that accordingly, and whether that be in real time or whether that's paid back to the first full pay period. If you are paying above award rates, then don't just think it's all okay. You absolutely should check and make sure you are still meeting the award minimum requirements. So you will absolutely need to take into account, if you're paying a flat rate for all hours worked or an annual salary, you will still need to compare the hours that that person is working. And that includes any penalty rate hours, so weekend or overtime or shift work. You still need to make sure that those hours under the award are still being paid better off overall. And that's what we refer to as that boot test, the better off overall test. A lot of people just kind of set and forget a little bit, which is a really comfortable thing to do. But we would absolutely recommend that you are doing this at least once a year. Especially if you find that maybe mid-year an employee changed their roster. Things like that absolutely can have an impact on their salary. So don't get complacent. If you are paying above award rates, and even if you think it's 3.5% above award rates, double check, because other things can apply that will alter that. And we're going to talk about that in a moment with some example boots. So before you start checking, or if you have an occasion where you think you need to check, these are great questions to ask. So have you made any changes to your trading hours or days? Are you working, let's say, past 6 p.m. or 9 p.m.? Or are you working on Saturdays or Sundays even? Have there been any changes in hours worked by any of the employees? Have any employees had a change in role or responsibility? That's another good one where progression is based on the responsibilities of the role. So if they are taking on more, that may need to be recognised in a progression in classification. Have any employees had a work anniversary? Have any employees had a change in benefits? So, you know, have you offered someone something specific that is encompassed in their salary? And lastly, has the employee had a birthday? Which is lovely. We all get one once a year. But junior rates do apply in some awards, and they can vary as to what's classified as junior. So under the Health Professionals Award, it's under 21. You might find like the Storage Solution Award, that's 19. So again, that can vary dependent on which award you are looking at. So these are really good questions, and these are actually questions that we ask when we do our benchmarking. We need to know if there's these changes, because that will have an impact. And that's why we do this. We have that stop check to make sure that things haven't changed that could impact someone's salary. So the example boots. Now, I'm sure some of you watching today may have already seen one of these. This is the strawberry seed template, which we know and love. Love to hate as well.
It's actually a cut down version, because ours has about 14,000 more cells in it than what you see there.
We're trying to keep it simple on this session. So I'm going to run through how we calculate it. Now, I appreciate that some people would prefer this in a different format, and that's absolutely fine. As long as you are encompassing the information, it doesn't matter how you get to the calculation. So the example is going to be that Betty works 22.5 hours a week, so she's therefore part-time. 7.5 hours of those are worked outside her ordinary hours, and that in her award is classified as shift work. She is paid a flat rate of $30 per hour. Now, when I'm talking to this, I'm excluding super. I'm not including that. That's separate.
Can I just say,
we don't ever.
We never, ever, when it comes to awards, and we get this question a lot, so I think it's important to kind of raise it. Awards are exclusive of super.
Yep.
If you include super, you have to remove that before you check.
Yeah, which we always do. So if you tell me it's got superannuation in it, I will remove that so I can compare apples to apples in the award, 100%. So the current award rate and these are made up figures, this is not real. We don't have a client called Betty. We have a Nana called Betty, but we don't have any clients. So the current award rate for level 3 support staff is, and you'll see that there's two rates there, 26.23 or 25.88. Now, I will talk to this more after the boots, but the 26.23 is inclusive of leave loading calculations. The 25.88 is not inclusive of leave loading. So you will see what we do is we align, or we basically have a line for each section. So we have the award entitlement. So you'll see highlighted in yellow there, the 26.23 or the 25.88. So whichever way you want to balance this out, it's fine. Again, there's different ways to do it. So we list the award hourly rates, and then you'll see underneath there that the employee gets the $30 per hour. We then have a breakdown of what the hours worked per week are. So you'll see there that she works 15 ordinary hours and 7.5 hours shift work. Total hours paid totals 22.5 in the week. So again, we're double checking that what's contracted is what's worked. And we get a lot of that as well in terms of that not aligning. So again, it's another good stop check to make sure that what someone is contracted is what they are rostered for. You'll then see that on the right-hand side in that next bracket is the rates. So you will see we've got overtime rates in there. We've got pay at ordinary rates, pay at Saturday rates, pay at shift work rates, and pay at overtime in total. So that's where our formulas will calculate. Okay, so you can see their pay at ordinary rate at 15 hours will be at 26.23 will be $393.43. We then add all of that up to the end there and we get these totals. So the total weekly pay, the minimum annual salary, and then the boot rate. So the better off overall rate of pay. So as you'll see there, 15 ordinary hours and 7.5 hours shift work, you would have to pay a minimum of $27.41 per hour as a flat rate to cover all of those hours because you've got penalties included. You'll have to, along the bottom one without leave loading, it's the same type of example. So you'll see there that the minimum boot rate would be $27.17 per hour. So both of those figures are more than the 26.23 or the 25.88. And that's because we're combining the penalty rates with the ordinary rates. So again, referring back to why do we ask these questions? Because it does have an impact for sure. Another example, and this one's a little bit simpler. Bill works 38 hours a week. He does full-time, ordinary hours, classified at level 2, pay point 4. He's paid an annual salary of $80,000 per annum, so $40.49 per hour. We can assume potentially that he's got leave loading inclusive. However, we've broken it down so that you can see both of those there. So you can see there that we've calculated the $80,000 down to $40.49 per hour. You can see in the yellow highlighted cells there, you've got the $39.63, which is the minimum rate in the award, inclusive of leave loading, and then without leave loading, $39.10. We've got his ordinary hours, then we've got the calculations for those, which as you can see, there's only figures in the pay at ordinary rate column. Then towards the end here, we can have a look and say, okay, well, this is very simple. We know that actually $39.63 is going to be the minimum award rate. There's no penalties. So we know that actually the award rate is going to be the minimum. So looking at that and saying, okay, $39.63 is actually the award minimum. I've got no penalties to add into that. So that is going to be my base. So I can say that $40.49 is above that marginally. So that person is not being underpaid currently. Now,
and I would point out that that's a perfect example of someone who's just being paid a bit above. Now, if this person, that was their rate prior to the 1st of July this year, and the rate goes up 3.5%, and this person's worked a year at full time, and now they need to go up to level 3 pay point 1, then that may, if you don't review it, they could suddenly now, because there's not a huge margin between those two, suddenly you could now end up underpaying.
Yeah. And that probably catches out people quite a lot, if we're honest. You know, as you said, they've worked full time for 12 months, so instant progression potentially. Plus you've got the 3.5%. So in your mind, even though you're sort of going, oh yeah, well, I've covered the 3.5% increase, it's the classifications that might actually trip you up on that instance. So yeah, always a really good idea to double check that. And just to highlight this as well, if all of a sudden Bill wants to work a shift work or a Saturday,
Every second Saturday, he's happy to do it.
yeah, he wants to. It's great. I love it. I can get out of the house. That will have an impact on that 39.63. So we need to take that into account. Now, the final aspect of the boots that we do is to try and find what we would call the outer limits. So when you're doing an annualized salary, or well, specifically when you do an annualized salary, but we would suggest this is best practice at any point in time when you're paying an above award rate, because you then have transparency about what is included in that figure. So hopefully you have an offset clause in your strawberry seed contract, which we do. If you don't have a strawberry seed contract, check if there's an offset clause. And that basically stipulates that if we pay you above award, it includes all the loadings, allowances, etc., that you're entitled to. So it's all very well and good saying we're paying above award, but you do also need that offset clause to make it as compliant as possible. So Janet is working 38 hours a week full-time during ordinary hours. She's a level 2 pay point 4 as well. She is paid $45 an hour in comparison to the $39.63 with leave loading that we've put in there. So how we calculate that then is the outer limits of Janet's boot. So how much can you include in that $45 before it hits its tipping point? Great show, 5 o'clock on channel, whatever it is. But specifically, we need to know where the tipping point is, because the tipping point is the point where underpayments may start. So you'll see there the calculations, 38 hours at $39.63, $1,500 a week. You'll see on the bottom column there, rows there, the outer limits. Now you can see the figures there, 8 and 2. So overtime is calculated at the first 2 hours at 150%. Any time after that is 200%. Now, fortunately, that is calculated daily. We don't have the luxury of breaking that down to every day. So we take worst case scenario. So we will say, okay, 2 hours at 150%. And then let's find out where the tipping point is with overtime hours at 200%. So you'll see over across to the right-hand side there that there is a red 2 cells, whereas the 2 across atop from it are green. So we know that Janet can work an extra 8 hours per week as overtime, with the first 2 hours at 150% and the rest at 200%. We know that if she does that, if she works 8 hours, she will be underpaid. If she works 7 hours, she will just be under the outer limits. So we do need to know the tipping point. You actually need to do this for annualized salaries anyway within the awards, in most awards. So you are still paying for the hours that they work. So you'll see their total hours paid, the outer limits is 46. So you are still paying those 46 hours, but you're paying them at $45. And up until the 7th hour of overtime, you are still meeting the minimum wage or the minimum award rates. As soon as she works that extra hour or extra half hour, that is when you are going to need to compensate separately. You can do that in a variety of ways. You can take it as time in lieu, or you can pay it at the overtime rates.
And when we're calculating this, we're calculating the worst case scenario,
yes.
right?
Yeah.
So it's important to note that, well, first of all, no one should be regularly doing 46 hours a week. Can I put that out there? We'll talk about
hopefully not
in a minute. But it's important to know, for me, it's a tipping point to where you would no longer be better off overall. But if this happens once a year, you're going to be fine because the rest of the year is going to offset it.
Mm.
Because you're paying that $45 well above the award for the rest of the year. What we try and do is kind of make you I like to say conscious rostering. So, this is kind of a bit of extreme, but it's actually much more important with part-timers in particular, because often they're the ones that will just start to regularly creep in and take some extra hours on. And part-timers also don't have as many hours to accrue the extra to offset it. So, if you're paying $10 an hour above the award and the person's working 38 hours a week, that's like $380 extra each week to offset. If they're only working 15 hours a week, it's only $150 a week to offset those penalty rates. So it's one of those things that it's good to know when would be the outer limit. And look, the case scenario of someone working 46 hours, but if you left this for a couple of years, that might degrade down and only be 2 extra hours a week.
Yeah.
So that's what, again, back to why we make sure that we check it every year.
We do that double check. Absolutely. Yeah. Oh, look, there we go. I missed two segues on. So yeah, again, that's why we check it. And that's why we encourage people not to just set and forget. So during those boot examples, I referred to leave loading. So annual leave loading. This is across, I reckon, 99.9% of awards. And
I think it's in all of them now.
I think it's in all of them now. So I haven't checked. Have you checked all 120 something lately?
No, thankfully we haven't had to use every single award yet.
Thank goodness. But this is an allowance essentially, or a loading that is 17.5%. That applies to the 4 weeks of leave that you receive per annum. You can again pay this in 2 separate ways. You can include it in your salary, which as you saw back in the last ones in the examples, we calculate it so that it's included, or you can pay it separately when someone actually does take leave. Administratively, it's probably easier to include it if you've got a good offset clause. And it reduces that spike of financial expenditure when someone goes on leave. Again, you can see here a bit of an example of how we calculate that. So essentially, we will take the leave loading and multiply that by the 4 weeks of the weekly salary there, and then we divide it down into weekly and hourly. So just looking at this one here, a level 1 employee would be entitled to $637.60 per annum of annual leave loading. So like I say, you can break that down.
These are examples because that minimum rate is well below the minimum wage now.
Yes, made up numbers. So yeah, but it is certainly something to consider as well. And like I say, can be paid in one of 2 ways. And obviously that is at your discretion and in what works for your business. So do I have to increase my employee's salary? If you're no longer paying enough to be at or above the award, then yes, you do. Absolutely. If the employee's above award rate still passes the boot, then any increase you apply will be voluntary because you are still meeting the award minimums. Now, questions we get quite often is, how do I set a salary? What do I know? How do I work that out? A good starting place is the award because that will outline the minimums. Now, the awards cover a multitude of professions sometimes, and those professions in reality, and when we look at things like market value or industry, prevalence, people in the pool, I'm losing my words, but the amount of people or resources that they have, these can all have an impact on what a salary expectation will look like. So you've got what area you work in, like I say, what the pool of candidates is, how many people are applying, how many people are skilled enough to apply. Are you using a recruitment agency? All those types of things can have an impact. You also want to be competitive, and you also want to be attractive to employees. So the award minimum is a great place to start to get that sense, if you like, of what is a minimum. But don't forget, you've got absolutely 101 other reasons to consider a salary that may be above that figure. Anything that we do in terms of comparison, and Carli mentioned, we do back pays fairly regularly for our clients, just to double check, over periods of time. These types of things can have an impact, and I've completely forgotten where I was going with that one, so I do apologize. But what we're essentially saying is the salaries absolutely can be above award, but just like the awards don't take into account superannuation, they don't take into account anything else that may apply to your business.
And really remember that these are the minimums you must pay.
Yep.
So if you are in a situation where you employ people in a profession where it's very competitive at the moment because there's not a lot of people available and you're competing against others to attract and retain the right people, if you're just paying close to the award, you're probably not going to be very competitive.
Or
and
attractive.
there's so many different factors that go into that. There was a period of time, God, I'm probably, my son was a baby, so probably going back 20 years when, when I was in Melbourne, executive assistants, like senior executive assistants, like to managing directors and things like that, in senior roles, were getting an absolute premium in market because there was a real shortage of skilled people around, and suddenly they were asking for like 30, 40 grand and getting it. And so if you didn't review the salaries and keep up with the market, then people were going out and looking and leaving. But then over time, the market came back down again because suddenly there was a lot more people that were skilled and therefore they couldn't like ask. So there's, market pressures are a big part of it. I think we've sort of come back a little bit to post-COVID rates in a lot of ways, but also, particularly if you're in an industry where like there is just generally a shortage of people within your industry and, people to work in your industry need to do 5 or 6 years of study, then it's going to take a while for that to, to come and meet where you're at. So really making sure that you need to research, you need to find out what other people in your area are paying. Are you rural? Are you, if you're regional and you're out in the middle of nowhere, you might actually have to pay more than what you'd pay in a capital city because you've got to attract people out there to work for you. So it's not an easy thing to do, but from our perspective, we're looking at compliance when we're talking about this. Like, are you legally paying people the right amount, not whether or not you're going to attract the right person with that amount.
That was what my back pay comment was going to be about. So thank you for reminding me about that. Yeah, when we go back and look at these things, we're looking at what the minimums are. So that's all we can benchmark against. But yeah, absolutely. And to your point, if you're in a regional area, I've had conversations with people that have like, oh, we've got a plot of land that we're thinking about putting a little tiny house on and offering that as incentive to come and work in a regional area. So yeah, there's so many other elements that the award does not take into consideration. So just bear that in mind. But for compliance, that's what we use. Absolutely. So what next? So if you're paying the minimum award rate, you need to change it. If your above award rate is no longer applicable, you need to change it. If you need to do those things, you need to confirm those changes in writing to the employee. That can be quite a simple letter, potentially even an email that is correspondence, that is documented in correspondence. And that can literally just stipulate we are moving you from X amount to Y amount. That will be applicable from the 1st of July or whatever date it happens to be. This is also a really great opportunity to align those classifications as well. So this is where we can use that change of conditions letter that we talk about fairly frequently. And it's just that little amendum to the original contract. You will need to update your payroll system, whatever that happens to be with the new rates. And again, as we've mentioned before, if there is any back pay, that's absolutely fine. Explain that in the letter as well, in the correspondence, that, we will be back paying this back to X, Y, and Z date if need be.
Because if you've never done this before and you're doing it yourself, it can take a little while to work through it. So if you actually don't finalize what and work out what you need, or you don't realize and don't work that out until, the last week of July, as long as you pay it back to that first pay period, it's effective from that date, which means you just back pay the difference. So don't panic if you don't. We've been very clear to all of our clients that we're going through and been preparing to do audits for since April, that, if we get it in after this week, there's a 2 to 3 week turnaround because we have a massive line of people who are ready to go, who got them in early to us. That's okay. It's okay that if, we get it back or you do it later, because you can, as long as you back pay it to the right date, it's fine. And as Frances said, just say that, this will be back paid to this date, so people know they're being paid correctly.
And even if, like, to your point, Carly, if you're busy, if it takes you a moment to do this, it doesn't hurt to communicate that out to the team. Hey guys, I know there's been an award rate increase. I'm working through it. I'll keep you updated.
Yeah, and
Even
this is a
just
good
that.
thing. It's a good thing. I want to make sure I'm paying you correctly, so I'm just holding off until I've had it all double checked, or I'm going to double check it. But just be reassured that it's going to happen, and this is when it will happen.
Yeah, absolutely. I'm going to hand back to Carly now.
Thank you. Superannuation. So the last of the legislated superannuation changes, thank goodness, is happening effective from the 1st of July. So the superannuation guarantee will go up to 12%. Now, one of the things that we've been really having fun with this benchmarking audit period, if you have a salary package that is inclusive of superannuation, you need to consider your options. Okay. My first question when someone says, oh, but it's, our salaries, we pay someone 100 grand a year and it says it's inclusive of super. I'm like, that's great. Does your employment agreement have a specific clause in it around super that states to the, that this is your total package and any increases to superannuation will be absorbed by the employee? Because if it doesn't have that specific clause in it, you need to increase their package to reflect that 12%, that increase from 11.5% to 12%. If you do have that clause, legally, you don't have to actually make the change. However, I also would ask you to think about what might be the unintended consequences of reducing someone's take-home pay, because that is essentially what you will be doing. If you don't adjust their package at all and you just increase their super by 0.5%, it's reducing their base salary that they get paid. And that can have unintended consequences too, because let's be honest, nobody wants to have their pay reduced. You want to be careful from a cultural perspective, and it really creates that what's in it for me approach. I'm going to make you absorb that. And I understand that it's a benefit and all that for employees, but that's not how employees are going to see it. And look, often a lot of people do align their mid-year salary increases with the mid-year, and if you increase the salary and it's kind of offset the 12% a bit as well, that's great. But if you're comparing, as we mentioned, you have to remove the super because all of the awards have nothing to do with super. But if you don't have that specific thing written into your agreement, you need to make sure you increase it. If you do, you need to think about, what could be the unintended consequences of not doing that.
I think it's also good to know that we have had a lot of sequential increases in superannuation over the last few years. The 12% is kind of here to stay for a couple of years now.
There is nothing else legislated. That is going to be what it is for a period of time.
Yeah.
And so that is the final change for the foreseeable future at this pay. Foreseeable future at this stage. Gee, we do well doing these.
Oh, don't we?
So there's a couple of other changes that happen as a result of the Fair Work review and the minimum wage increase. So from the 1st of July 2025, the application fee for unfair dismissal or adverse action claims goes up to $89.70. So it costs someone basically $90 to make that claim, but that is indexed. It goes up every year. The high income threshold also goes up every year. For those that are not sure what that is, it's essentially the tipping out point for unfair dismissal. So if somebody earns more than what is now up to $183,100 per annum, I was literally just before we came onto this reading a case about where somebody actually went to Fair Work to contest that they couldn't take an unfair dismissal because if you included their incentive payments, they were above it, which the employer wanted, but if you didn't, they were below it. And so, there are different parameters there, but essentially someone who's on more than that will generally not have access to an unfair dismissal jurisdiction with Fair Work. They essentially have to go through more of a contractual law issue if there is an issue. And also the maximum compensation that is available for dismissals goes up to $91,550, and that is because it's 26 weeks of the maximum of that sort of high income threshold. That's how that is calculated. Now, there's a couple of other changes that are coming our way, and I just want to touch on some of those. I'm not going to go into a great deal of detail. We had it in our newsletter this month. The first is paid parental leave. So this is something that is paid through employers, not by employers. It is increasing by an additional 10 days. So it's going from 110 days of paid parental leave to 120. There's also another increase that's due to come in from the 1st of July next year as well. But what they are doing is they're adding the superannuation guarantee. So previously, while someone was on paid parental leave, there was no superannuation paid on that. They will be paying the 12% super on that. That is not paid by employers. This is not an additional cost to employers if you have someone on paid parental leave. However, if you top that up with, and you top up their paid parental leave, you will have to pay superannuation on that amount now. So, if it's something that you're paying as an employer, you're choosing to pay, that's not the entitlement that's being paid by your business to the employee, then super will be paid on that. But generally speaking, if you don't top up pay parental leave in any way, and it's just the government entitlement, then the ATA will take care of that for you. You don't have to worry about it, but it is something you should be aware of because people might ask questions about it. There's also new portable long service leave schemes for community services being brought in New South Wales and South Australia. New South Wales is effective 1 July and South Australia is effective 1 October. If you work in those areas, please make sure you look into this. This is a state-based portable long service leave scheme that's sort of based on what's happened in a few other states. I'm not going to go into the details. It's not my area of expertise, but it's certainly something if you're in those states in that area, you need to know. Now, the other two legislative changes, we're getting towards the end now, that will be effective from the 1st of August 2025 are the next stage in the right to disconnect and casual conversion. Now, these were two things that came in last year on the 1st of August 2024 for businesses with 15 or more employees. And the second stage is for those that legislation to now apply to small businesses who have less than 15 employees. So in regards to right to disconnect, for those that aren't familiar with it, it's basically the entitlement to not be contacted outside of your working hours. So not having to be expected to respond to emails or phone calls or other things, unless there's some reasonableness in it. Now, what's reasonableness? I actually pulled up the definition and I'm going to look at it next to me here. So what, why are you making contact? How are you making contact? Like what's the level of disruption that's causing? Is the employee being compensated for that time? That you're actually contacting them outside of hours, what's the level of role and responsibility. So the more senior you are and the better you're paid, the more likely it would be seen as reasonable for you to be contacted outside of your working hours. And also looking at their personal circumstances. So if an employee has caring responsibilities and other things that you might be disrupting. So that now applies to every employer. There's no exclusions anymore. And, it's really important as an organisation that if you haven't done so already, that you put some policies in place around that and train your managers. Train your managers so that they understand what isn't acceptable. Now, we were chatting just before we came in that I was, again, while I was waiting, I was reading a few articles and they've had the first compensation claim, which is just under 800,000 on the right to disconnect. Please don't panic. This is like a large organisation. But employees, the jurisdiction is fair work. So if someone has a dispute about being contacted and you take some sort of action against them as a result of them not responding to that, you contacting them outside of hours, like some disciplinary action, you terminate them or something like that, they can make a claim to fair work that you have, because that's a workplace right that they have. And that's done through the General Protection's adverse action claims. And yeah, there's a current first big case to hit the courts is, what she's claiming is about 780,000, I think. So it is important to get to know that if you're not familiar with it already, because it's going to apply to everyone from the 1st of August. Now, casual conversion, that also came in on the 1st of August last year for those with more than 15 or more. So basically, there is a slightly different, what's the word I'm looking for? Obligation.
They've called it pathway, haven't they now?
A slightly different obligation for an employer with less than 15 employees. So an employer with more than 15 employees must, after 12 months, when an employee has been working regular and systematic hours for at least 6 months, who is a casual employee, if they hit their 12-month mark and they have been working in a way that's not really reflective of a true casual, as by the definition, an employer with 15 or more must offer that employee, permanent employee, at the 12-month mark. Now, for small business, you do not have to offer it proactively, but you do still, if somebody does request it, and they start, they can request it on the basis that they have been working, consistent and regular hours, and the definition of a casual is that there is no firm advance commitment of ongoing work with an agreed pattern of work. And the person accepted that offer and it's put in writing to them. But if they hit the 12-month mark and, the employee kind of says, hey, I've been working regular and systematic hours, and they're now, and even if it's been offered to them before and they've said no, they can come to you at any time and they can request it to be moved to a permanent position. If they make that request, you have to actually assess it. You've got 21 days to respond. Ask them to put the request in writing. You've got 21 days to respond to work out what's reasonable. And, there's a number of reasons that you can, reasonable grounds are things like, well, you still believe they meet the reasonable definition of a casual. It would cause a significant burden to operations. There's a lot of different things, and there's still kind of, starting to work them out in the courts of what is and isn't reasonable. But ultimately, what you need to know is if you have casuals and you have under 15 employees, if an employee with more than 12 months service approaches you, make sure you go through a process to assess whether or not they actually, whether or not it's feasible to offer them permanent employment, if you do want to say no, you need to have reasonable grounds and you need to document that whole process. So always ask them to put it in writing, always provide your response in writing, particularly if that response is a no. Other considerations we always tell everyone at this time of the year: look at your contractors, look at your casual employees, because these are two areas where people either started. There's two ways people get in trouble with these areas. People start as a true contractor, they start as a true casual. Then over time it morphs and it changes, and really they're now probably operating much more like an employee or a permanent employee, and no one has looked at it. Or from day one, they never should have been either one of these things. So it's a good time of the year to kind of look at your casuals and go, are they still true casuals? And, is there someone that I could make an offer to? Do I have contractors that are probably going to be seen as more sham contracting? And we can definitely help you with that if that's something you need help with. So our next webinar will be onboarding employees, setting a strong foundation. Now, as I mentioned at the start, I've put a link to a survey in the chat. We have a current survey out around training and webinars and what topics we're going to cover in the future. And we really want everyone to help us work out what our next topics will be and our next training will be. So jump into the chat if you haven't filled in that survey already. Because it'd be great to get everybody's suggestions, and we'll start looking at what our topics are for the rest of the year into next year. Now, the other thing that you get if you fill in that survey is you go into the draw on Friday afternoon. I will be drawing one person that's filled in that survey to attend a free spot at our Lead with Impact Grow Your Leadership Skills online 5-month program. We've just finished our first one that started in February. It was a sellout. This one is now on, and the early bird finishes on the 30th of June. So if you want to attend, I recommend you get in. I have on there offered a specific discount code of 15% to anybody that's been in this webinar. It'll also be in the email we send you if you're interested. And we do have an in-person leadership training coming up in August in Sydney too. Mental health first aid, we've got a couple of sessions face-to-face coming up. Are they both in Torquay, Frances?
Yes.
Yep. So a standard course and a refresher course. If anyone's got questions, please throw them in the Q&A. We're going to get to it very, very shortly. We will be able to, if you're interested in mental health first aid, particularly in-house, we've been doing a lot of in-house for organisations. Or, if we've got enough people, we'll do another online one as well. Really quickly, we have a couple of new fixed price services. We have our HR coaching call, but the one that I want to mention is our compliance check. And this is where we can actually do the benchmarking for you. And we have a fixed price package, which is based on the number of employees you want us to review. So if you have looked at all that and gone, oh my God, that's doing my head in, I don't want to have to think about any of that. I don't understand how to do it properly. I just want to take it off my plate. Email us at info@strawberryseed.com.au and we can send you the details to fill in. You can decide how many employees we want to check. We don't have to check everyone. We can check whoever you want, and we can do all the checks for you to make sure you're playing correctly. So that is where you can follow us on all the different platforms. I noticed that a couple of people, some of the questions they asked for future topics are actually topics we've done previously for our webinars. So please make sure you check our YouTube channel or our website for previous webinars. But let's open it up for questions because I know that there'll be quite a few people that are keen to do that. Frances, do you want to flick back to the last one just so it's on the screen?
Oh, yes, please hold. I just need to get my... I need to move
I can see we've got quite a few questions coming in, which is great. Throw your questions in there, and then I will definitely hang around and answer any questions about the proposed changes for health professionals too.
Now, forgive me, I'm reading on a different screen. So what happens if the role of the practitioner doesn't change, but they have met the requirements to go up a pay point and the next level is an increased classification? For example, HPOS award, they are on level 2 pay point 4. They have met their 1,800 odd hours, but do they go to level 3 pay point 1 even if their role or duties don't change? Can I answer this one?
Go for it. Yep.
This is a question that we get very, very, very often. So progression through pay points should absolutely be on an annual basis, without question almost, unless someone is really not performing in role. Even then, that's a discussion about we haven't progressed you because of X, Y, and Z. And
are you doing any disciplinary process in them? Because
yes.
if they're not performing at that level in their role, that's a problem.
Yeah, then that's a whole other issue. Call us. Progression through levels. You can have what I always call a moment of pause, because they do need to be meeting the requirements of the next level. Our prime example that we most often give is transition from level 3 to level 4. So if you think about level 1, that's your entry level, early career sort of stages. And I'm sorry, I'm referring to the Health Professionals Award.
Well, the questions about that, so.
All questions are probably about that. Level 2 is sort of people really getting their stride. They're getting a little bit more independent. So kind of mid-career. Level 3, mid to more senior level career. You're probably looking at people having doing complex cases, being quite independent, potentially supervising others, etc. Then level 4 starts to include some responsibilities around the business operations. So we quite often find that people will max out, if you like, practitioners will max out at level 3, the top end of level 3, because they're not necessarily taking on any responsibilities of the business. So that can be things like rostering, again, supervising, it's making business decisions, it's managing budgets, it's allocating budgets, etc., etc. So quite often that's the director or the owner of the business that can sit in a level 4, but there can be moments of pause. And again, check the award, what the classification outline is, give us a call and just talk it through, because it's not necessarily automatic.
And it's also not hitting it. It also doesn't mean that they have to be able to do 100% of what's in the next level either.
It needs to be the majority.
But I would generally say by the time someone's at the top of level, look, I would say if you're talking level 2, level 3, that I would just be progressing them through. Yeah. If you're not wanting to progress them through, it would be a really good reason. And if they're not performing in their role, and that should be being dealt with. The top of level 3, that to level 4, in our experience, remember, these are the minimums. Even if you stop, I can almost guarantee you that a practitioner with 10 years plus experience in most, different types of allied health is probably already getting paid way above the minimum at that point. So it's almost a non-issue, because usually, in my experience, and Frances, tell me if yours is different, but by the time someone's at that top, you're talking about tipping into level 4, they're probably being paid out higher than the top of level 4 anyway. So it's kind of a non-question in terms of are they being paid correctly. But if you ever and it depends on that particular award. Yes, mostly it's progressing on completing those hours, but it's more at the top of level 3 that we see people kind of stagnate than any earlier.
Yeah, stop. And again, if you've got any questions or queries, and I quite often will say this to my clients, sorry if anyone's already heard this from me or from Carly, but the classifications, you really are making as much of an informed decision as you possibly can. So I always say, if you're in doubt about a classification or a level, pay point, etc., look at what the classification reads as, look at what the person actually does, what their experience is, what their skills are, and be able to justify why you've selected that level or classification. Because at the end of the day, and the employee would have to challenge that, and the only way that you will ever find out definitively would be that the Fair Work Commission would actually rule on the classification. So we always say, be guided by as much information as you possibly can to make the best educated decision on that space. And obviously we do that with a little bit of experience under our belt as well. So if in doubt, give us a call and we can chat through it. Next one, question for the end. If someone moves to a higher award class when taking on additional duties, but after a period of time steps down from that role and duties, can we move them back to their award class based on the annual progression, or do we still need to pay them higher salary even though they're not doing higher duties? I've got a question around that one, which would probably be, has this been a permanent change in terms of taking on additional responsibilities, or is this a secondment or a temporary thing? If it's temporary and you've outlined that in writing, then potentially, yes, you could revert back to what it was previously. If it's not, and you've just gone, yeah, this is great, we're moving you through to whatever it happens to be, whatever level and pay point, then you could move them back, but that's going to be with their permission and their consent.
It's going to depend on your award. It's going to depend on the circumstances, because technically you cannot reduce someone's salary without their consent. Now, so, you know, as Frances said, if it was set as a, let's try, I would say if you're going to move someone up to higher duties for a period of time, or you're not sure how they're going to go, you can always do a trial secondment and say, let's do this for a period of time, and then we'll review it and say, look, it's not working, and bring them back. So it's really clear. There's a few things to consider in that, and it's not necessarily cut and dried. If you've moved them there and they've been doing that for 12 months, and then you've decided to take that part of the role away from them, and you've made that decision, you can't just unilaterally change their salary without their consent and mutual agreement. So it's a tricky one to answer, and I would like to be talking in a lot more nuanced detail about that particular one rather than just answering it like that. But yeah, and that's why sometimes talking to us before you move someone up, and you know, there's nothing wrong with trialing something. There's nothing wrong with saying, hey, let's see how this goes for 6 months, for 3 months or 6 months. During that time, we'll, you know, move you to this, but you know, with the view that if we decide that it's not going to be permanent, you'll go back to what you were on before. That's a good way of doing it.
Yeah. If in doubt, give us a call.
Yeah. I had that. There was a question there from Warwick. Yes, this whole presentation is recorded. You'll get a copy of the slides and the recording. It'll all get sent out tomorrow morning to everybody. There'll also be a link to hopefully everyone can see the link to the survey now, because apparently I sent it to myself and Frances and not to everybody. I've just put it in there again. If it's everything will be in the email tomorrow. You'll get a copy of it all. Everyone will get everything. So that's great. We've got one
last question.
Yeah, there's one down the bottom there.
Do you want me to go through that one?
Yeah, go for it.
So someone has asked, with moving between levels and pay points after the full-time equivalent hours, does this apply if an employee is a part-time employee working in another job? I.e., can they accrue the hours to move up across the 2 different jobs, or how is that? Or is it as many hours in the business? Really great question. If you have got a part-time employee who is working in the same profession, doing the same job, then the hours would be combined. If they are working as a physio with you guys, for example, and then work as a bartender of an evening or in a restaurant, it doesn't apply. If they're volunteering, it doesn't apply.
It's based on their hours, their experience.
Yeah. So it has to be relevant.
You know, it has to be, if it's relevant experience, it's relevant experience. So, you know, if your role and their role combines to make a full-time equivalent, it's full-time equivalent. It's not just the experience with you.
Yeah, absolutely. And that's another point to be very aware of as well. So especially when you're benchmarking. Yeah, for sure. Last one. Oh, another one. Did you mention the health award changes for practitioners
Out.
post big jump? Here it comes.
Because there were, as most people who I think who work particularly in under the Health Professional Award know, that there were some announcements around the gender gap review that was done, and your award is one that was actually identified as one that needed to be looked at. Now, I don't know if everyone read the very, very long document. I read some of it about why they targeted different awards. So they started with looking at awards that had a higher percentage of females working in them and doing some assessments to see whether or not there was parity from a gender pay gap. Now, a couple of the reasons why it was sort of identified that they were, and part of the reason why they've identified the classification system in that award as one that they're going to that needs to be reviewed, is because it's quite arbitrary. As we've talked about, it's quite arbitrary on how people move through, and it doesn't matter what degree or what qualification you have, aside from the starting points. Like, you really do progress through normally. The way that people progress through those points based on levels of experience was pointed out to be something that could be quite detrimental to women that have children and go part-time because obviously they're not progressing through, or they lose the opportunity to progress through and keep up, in terms of gender pay gap. There's also, so what they've looked at doing, and also there was seen as being inequities because, a massage therapist and a psychologist with a master's could essentially, if they've got the same amount of experience, be on a very similar minimum rate. So they decided that they were going to look at the classification system. This is what they've announced, that they're doing that. They've taken submissions at the moment on that. Nothing has been decided, but what they're proposing at this point is that they move to a similar classification structure as, say, for example, in manufacturing, which is based on the AQF, the Australian Qualification. I think it's AQF. God, now I'm losing it because it's 8:30 at night. But basically lining it up with the qualification standards. So what your level of qualification is will be maybe at different levels, and then depending on additional PD and things that you've done, that may also have something to do with it as well. Now, we don't know what that looks like yet because it has not been released yet. Now, there's all these rumors floating around about what the pay increases could be, anything up to 30% and all this. None of that has been set in stone. And in fact, some classifications of people may go down what their minimum is, others might go up. But we don't actually know what that looks like yet. They've taken submissions, but what I can tell you that we do know is in other awards, when they have come in and said, hey, we need to make adjustment to the rates. Sorry, I should also mention, when they sort of started to do a study on changing the classification system, they then compared it to what the minimum rates were at all those different AQF levels compared to, say, the manufacturing award, which also runs on that. And there was a lot of disparity there. So what they're saying is someone who has like an AQF 9 qualification in the manufacturing award, the minimum for that is a lot higher than in your award. So the whole idea is to kind of bring it in line with, people's level of qualification and experience. So the way they've done it in other awards where they've made a change, it is not going to be an overnight change. I kept saying to people, it's not going to be a 1st of July change, because they're not going to change the entire classification system and dump it on somebody in the last week of June. There will be plenty of time to understand what it looks like, to work out how people will be classified, and they will stage it out, because they're not going to go, here's a bang, 20% increase for this particular classification at once. They will stage it out. They might do 6 monthly increments. At the 1st of July next year, there might be some classifications get a higher increment, but they'll stage it out over a couple of years until it brings it up. So it's not going to be a one-off, here's an extra 20%. And as I said to a client I was talking to not long ago, who rang me and I was talking her down off the ledge about this, is that she already plays a lot of her people. She's a physio practice and EPs, and a lot of them are already played well above the award. She might find that, once the dust settles on it and we reclassify, one, they could be very similar to what they were on before, or she might already be paying enough to be paying above that already. We won't know until it's published. We won't know until they tell us. And It's not going to be something that happens overnight. We will certainly be keeping everyone informed. And once they do tell everybody what it is, we'll be doing one of these just for allied health. I can assure you of that. So what I'd like people to do is to not panic about it, to wait until we have more detail and just trust the fact that Fair Work never just drop a 10, 15, 20% increase on a particular area. Anytime there's an adjustment that needs to be made, they stage it in over time. So we will have plenty of time to work it out, to look at it, to work out what new classifications are. I mean, were we a little bit worried that they were going to do it? Yes, we were, but we just plowed ahead like they weren't. And I will say, as of today, certainly all the pay guides and awards that we have been looking at are all updated. They've all got the new rates in them, so they are now available. But if you do have any questions, I do know there's a lot of people out there and they're speculating. There's a lot of speculation on what that looks like. And I don't like speculation in these areas because no one actually knows the answer. Submissions have gone in, they've received them all. When they have more information, they will tell us. Now, we don't have control over what their final decision is. I think they will change the classification system. And for those that haven't, I really do recommend reading through the reasoning in the submission from Fair Work on why. I mean, I did have someone say to me, oh, well, our particular stream in allied health doesn't have more women than men or anything like that. It's not about that. It's about making sure that there is parity, just generally out there. And what has happened in the past is, say, for example, manufacturing has very strong unions and other things are very male dominated. And over time, there's disparity has come about, and they're trying to kind of fix some of that. They've already done aged care. They've done some of the SCADS award has happened. So, they're picking particular areas where they're picking this up. And it will happen over time. It will happen with a lot of notice, and everybody will be able to know what's happening in advance. It's not just going to get dropped on you. And again, you might have some people that go down a classification, some like.
Oh, I think Carli's frozen. I'm not sure if you can still see me, guys. I won't delay any further. Apologies for that. Hopefully we can rectify that. There was one last question in the chat just around maternity leave or parental leave or leave without pay time counting towards years of experience within the Health Professionals Award. Again, that's a no. So any forms of unpaid leave, including parental leave, don't count towards years of experience for classification progression. They're not practicing, so it's not relevant. So with that in mind, if there's no more questions, we will wrap it up for tonight. Thank you very, very much for attending, and have a lovely evening, and we'll see you again next time. Thank you.